Welcome to Talent Buzz, where I talk with SaaS companies on how they are doing their talent acquisition. And in today's episode, we are talking about how to find a CFO for your SaaS company. And I'm joined by CEO and founder of Calqulate, Niko Laine, who has background in being a CFO in fast-growing companies. And let's start the episode by asking Niko why it is crucial to have a great CFO in your SaaS company.
I think it usually revolves around cash and revenue, and then basically making sure that the company has enough cash runway and plans their operations so that they still have cash in the bank in 6 months and 12 months, and they know when they run out of cash because SaaS companies are supposed to grow, they burn too much money, and then eventually they will run out of cash, then they will raise more cash. So cash is really important. And the second part is revenue and growth. So basically all the operations of the company need to be optimized for high growth. And those are the two key things. So cash runway and revenue growth. Those are the two things. And usually the CFO is the best person to pull everything together and making sure that both aspects are met in the company.
And I think basically every SaaS founder kind of understands the revenue part and cash flow part, at least somehow. And typically, if we think about a kind of founding team in a SaaS company, typically there is maybe one technical person, maybe a CTO, and then maybe one commercial person, CEO, or there might be only technical persons or only commercial people in the start. But typically, a SaaS company don't have a CFO when they are starting, and typically it's on the CEO's table for a while. But when do you think a SaaS company should hire their first CFO?
I would rephrase the question and then maybe talk about a finance person at first, and then move on to CFO. Because what startups in general need, and especially SaaS companies need, they kind of need an all-around finance person at first. So somebody who's necessarily not on a senior CFO level yet, but somebody who can actually put their hands in the mud and then start working and then do all sorts of different things. And starting from some very junior things like billing, invoicing and payments, to something more senior like analytics and growth metrics and helping with fundraising, for example. So we're like an all-around person. That's usually the first role, and then that role does not need to be full-time, but the earlier that you can hire that kind of person, the better, for a number of different reasons. I'll go there quite soon. But then basically, usually the first person you need is somebody a little bit more junior, somebody a little bit more affordable as well from a salary perspective, and then who's willing to do all sorts of things. Because when you hire a CFO, the CFO basically wants to lead a team and do something more high level and not really something operational. So there's a little bit of a motivational gap as well there. So a junior person is more willing to put their hands in the dirt and then start working. So that's one thing. So then if you can hire such a person on day one, perfect. Maybe you don't need, especially the first 2 months or 3 months, if you're like building a product and thinking about processes, but then very soon, especially part-time, I would say that you need a person like that.
Basically, what would be interesting to hear, kind of now I understood the kind of difference between CFO and then some kind of like a financial person. But in the beginning, like at least what I've heard is kind of a lot of SaaS companies, they have an kind of accountant company who's kind of helping them on those things. So kind of where do you draw the line between kind of hiring an agency to handle that one or bringing someone for your in-house team?
Yes, I think every startup, every company needs a good accountant, and the most common way to deal with accounting is to hire somebody from an accounting company, and so they would do, for example, the basic accounting, deal with the auditors, send VAT reports, and file your taxes. But that's really like the baseline thing. And if you want to do almost any kind of cash flow forecasting, or update your pitch deck, or run any growth metrics, or for example set up new processes and so on. You need to most likely have that at least a junior person working part-time in-house, or like an outsourced person who's working part-time in the same role. But usually the accounting company would not necessarily be that party doing that work, because they're working more on statutory and legal things, what the auditor needs and what the tax office needs. But then that in-house person would be working on what the company needs and what the board needs and what the management needs. And then thinking about, okay, how to optimize the operations for growth, how to do cash flow forecasting, where did the new revenue come from, and so on, like analyzing more like management accounting. So there you would need that first like in-house junior person. And then once the company grows, then that person becomes a little bit more senior, or there's another person who might be on that CFO level who will then manage the team of more junior people there. But it basically starts from quite basic stuff like sending out invoices and making sure that customers pay, and then making sure that you get your first analytics on your kind of revenue, new revenue, churn revenue, lifetime value, and so on. And then those are the most like burning needs for that first in-house person, I would say. And then things evolve relatively quickly, and then basically you need more senior people.
Yeah, makes sense. And then basically when the team is growing, it might be that you hire an CFO from outside, or someone from the financial team is kind of growing for that role. And I think will be interesting to learn a bit more is different stages. So if you're a SaaS company in seed round, most likely you need a different kind of financial team that you need when you are in a C round and raising a lot of capital. So what is the typical stage, like if we think about the kind of funding rounds, like when typically there is already a financial team, when a CFO comes in, and when you should be maybe changing your CFO, or should you?
Yes, I would categorize CFOs for a startup in 3 different stages. You basically need your first CFO when you're raising a larger seed round. For example, say if you're raising 5 million and you have the money to pay actually a CFO salary, then you would probably need a CFO, because your growth targets are such and investor reporting needs are such that you need a senior person. And that's the first role, so first stage of a CFO. And then that company grows, employees, there's more headcount, there's more, parties involved, and you're in that Series B, Series C stage, and the company might have 200 employees, for example, and lots of different investors, corporate banks, and mergers, acquisitions, and so on. So you need a different kind of person for that, the more senior person. And then when things evolve and you're going towards IPO or like selling the company, you might need another type of CFO. So I would categorize those as 3 different levels and 3 different types. And when you're getting to that like IPO level, then you need more like a corporate CFO, not like a startup CFO anymore, not a growth CFO, but you need a corporate CFO to handle that process. And those are completely different kind of personalities and skill sets when you think about the seed stage CFO and the IPO CFO. So they would definitely be 2 different candidates. Maybe the seed stage CFO is able to grow into the Series BC role, or maybe the Series BC CFO is able to grow to the IPO CFO, but you would normally see at least 2 different people and expansion in the finance team there. And I usually use the reference of like building like a construction company in a way, like you're building a skyscraper. And when you have a seed stage company, you're like building the first blocks, like you're basically making sure that the water flows into the building, you're building the foundation and electricity and so on. And it looks like nothing is really happening, and you don't necessarily need that many people there. And then there's a lot of groundwork that needs to be done. You're building the first processes, you're taking the first like accounting software into use, and payroll software and HR management software, and hiring practices, and the first analytics that you're doing, that the first investor reporting that you're doing. And then that's a lot of building, and that's a lot of like new kind of thinking, what would work with this kind of company and so on. So that's the seed stage. And then when you get to, in the construction reference, you get to the higher levels, then things start like changing pace, and then you start adding floors, and new floors, new walls, and so on. Things start moving forward really quickly, and then it's all about growth, really. And then you get to high speed. Your sales team is getting bigger. Your marketing team is getting bigger. You have more HR people. You have more finance people. And then all of a sudden, you have 200 employees, and then you have to manage a completely different kind of business. And you don't necessarily have to build something from scratch anymore, but you're kind of incrementally updating your processes and your reporting all the time. But you needed that groundwork to be done first. So that would be how I would categorize, seed stage and Series B stage companies. And usually for startup, things change so quickly, and that, from Series Seed to Series B might be just like 2 or 3 years. And, raising 10 million, raising 20 million, raising 30 million, increasing your headcount from 10 people to 200 people, that might happen so quickly. And then your skill set as a CFO might not evolve that quickly. So it might be just that, okay, you cannot adapt as a CFO to the rapidity of the change and the expectations that all of a sudden you have, a large American investor asking you for something, and a large German investor asking for something else, and you have to build all these processes for a large board, and so on. And then you just need a different person for that. So then different profiles for different stages, and for a non-VC backed company that's growing linearly, you have time to adapt and you have time to build your own experience. But in a startup, you're kind of running out of time. The finance department is always behind because things are just changing so quickly, and you always need 2 more people. You always need more analytics, and you always need more processes, but you'll never have enough time, and you never have enough people for that. So that's kind of like running, against the clock all the time.
Yeah.
So that's the usual cycle of a startup.
Yeah. If you think like as a tip for a CEO, so if there's a CEO now listening, and let's say that they are going towards B-round next, and they already have a CFO, like how they can really kind of identify, is this the right CFO taking us to the next level? Let's say that is a CFO who doesn't have experience from getting a company to B-round. But other than that, like what are the traits or what are the things that you would evaluate as a CEO when looking like, hey, is this the right person to bring us through the B-round, for example?
I would basically analyze like 2 different main aspects. Like, does the person understand the fundamentals of the company and the growth potential of the company, and then how does it show up in the company's financial forecasting and analytics? Because, for example, in order to be a really good CFO for a growth company, you need to understand sales analytics, you need to understand marketing analytics, and you need to understand how to utilize that in your financial forecasting to identify where is growth coming. Should we invest? Should we hire 5 new salespeople? Because if we do that based on historical data, we can double our revenue. Or should we invest in LinkedIn marketing and then, invest in customer acquisition through those channels? Maybe, this channel is working, sales cycles are shorter, and then we can basically get more growth with lower customer acquisition cost in certain channels. And then we optimize our financial forecasting growth plans accordingly. But basically, a CFO would be one of the only people in the company who basically understand what every single department is doing, and how does the expenditure of those departments affect the cash flow forecasting, and how does the targets and the headcount of those departments affect growth and therefore revenue and therefore cash inflows as well, and putting all of that together and then compiling the growth plan of the company, including the cash runway, so that they can comfortably say that, okay, we can hire 5 new people in that department so that we generate this much more revenue and cash flows, and then we still have cash in the bank in 6 months. We can comfortably, pay our salaries later on as well. And they would basically have to, measure and track that performance all the time. Like, did we make a good investment? Should we maybe save some money? We're behind on our revenue targets and cash flow targets, but we actually spent that money already, for growth 2 months ago. So we should take a step back, for example. So it's all about growth optimization and then putting all those targets together, understanding where growth comes from and tracking and answering like simple questions, like if a CEO asks, okay, we were supposed to grow our revenue by 2 million, but we only grew it by 1.5 million. Why? So did we have churn? Was that, channel A was working, but channel B wasn't working? And then sales cycles are longer in this market. And then conversion rates, for example, from demos to closed deals in this vertical wasn't working as expected. And then that's why we generated 500,000 less revenue than expected. But we made those investments and we hired those 5 people. We spent 500,000 on LinkedIn advertisement. So we invest that money, but it didn't translate into revenue and cash flows according to expected time frame because of this and this and this, because that particular thing in the sales funnel wasn't working. So they basically need to give concrete answers why something was either met or not met, and what was the financial implication of that, and how can you improve that so that you don't make the same mistake afterwards. Maybe you need to make some staff changes, or, for example, track your sales better. For example, make sure that you send out 200 more sales emails per day, or optimize certain conversion rates. It's kind of, you get to that kind of like sales analytics level and marketing analytics level that most people do not necessarily understand how they translate into revenue and cash flows. But the CFO needs to tell you like that. And that's a good sign. If they don't have that answer, if they have to, measure that for, investigate for 2 weeks, they're probably not a suitable Series B CFO. That would be like a quick summary. So growth and answering questions like, why did this happen?
Exactly. So super interesting traits on a people, and I can imagine that kind of finding a CFO for a company is super hard. Like there isn't that many kind of good CFOs out there. Most of them are most likely working in a SaaS company, and then kind of if you need one, it is, of course, I think every time you are like finding a person with whatever the role is, it's kind of combination of first kind of selling your company to that person, like, hey, why you should join our company. But then the other side, of course, kind of validation of that person, like, does that person have the right skill set? And I think kind of if you have a CFO working already in your company, you can kind of quite easily see like how good they are in their work. But then if you think about the kind of recruitment process, so you would be bringing a new person in, you cannot basically see everything about that person. So how would you kind of test that person? Would it be more about discussions around these topics, or would you give them some kind of task like, hey, here are our numbers from last year, tell me what you see?
That's a really good question. I would first have to define the stage of the company where they are and what kind of candidate they should hire, and then we'll test accordingly. But if you're, for example, hiring a CFO for a Series B, I would definitely, organize tests and lots of discussions around the topic that we just discussed. So sales analytics, marketing analytics, and financial analytics, and kind of like how would you put the like financial forecasting on autopilot? You change just one element, and then it immediately displays result in revenue forecasting and so on. So I will probably talk about that quite a lot and see how their mindset is geared for growth. Because when you think about a CFO, the average CFO in a non-VC backed company, the non-SaaS company, they are basically, thinking about statutory reporting. They're thinking about audit. They're thinking about tax office and so on. And they're thinking about profitability. And that's what, CFOs are trained to do. It's more about risk management and keeping all the stakeholders happy, but not necessarily like growing the company. So when you're working for a startup that's growing fast and they have extra money to burn for growth, they have to change their mindset completely. So then there's not that many CFOs who are able to do that or have done that. So then I would train like how curious is that person, how well adapted they are in the startup ecosystem, for example. Are they able to shift that mindset from burning more cash, not being profitable, but tracking the right metrics and then optimizing for growth? And then that would be the first thing I would see. But then finding a good CFO or startup CFO, SaaS CFO, is really hard. It's like trying to find a unicorn. It's like finding a needle in a haystack. And I'm always laughing when companies are saying that finding a really good software developer is hard. There is even in a small market like Finland, there must be like 20,000 software developers. Okay, it is difficult to find a software developer, but anyway, then maybe there's 2,000 data scientists in a small market like Finland, but then there's probably 50 startup CFOs who you can basically hire for a high growth VC-backed SaaS company. So 50 startup CFOs, 2,000 data scientists, and 20,000 software developers. So it's quite hard to be to find one of those 50, and you have to do a lot of work to track those down and convince one of them to join your company. The other option is that you basically train somebody, you hire somebody a little bit more junior, and then you train on the job, and you make sure that they're really curious and open to work hard, and then they evolve in the job. So then that's another thing to test, like how adaptive they are and how quickly can they learn, and are they willing to work crazy and evolve in the company, because then they almost need to become like founders of the company. 40 hours a week is not enough for that kind of role, because then you're always running behind. So then it just causes so many like friction points when you're trying to find that really good SaaS CFO, because then it's really hard to find them. So generally speaking, I would recommend to hire one step lower and then training, or then hiring for example, a junior and a senior, and see how they evolve, because then one of them might be a good CFO then after some time, especially a good seed CFO. Then they might evolve into a good Series B, Series C, if you have enough time to train them.
Exactly. And I think what is kind of super crucial when there isn't that many kind of potential candidates is like really understand how to position your company as a workplace. I think same comes down kind of what you are doing in sales and marketing. There's always like multiple options, whether we are talking, for example, Calqulate, the product you are building. There are kind of others who are doing somewhat similar things, and it all comes down to like how to position yourselves in the correct way. And I think same comes for recruiting a CFO. Like, why in hell someone would move from other SaaS company where they just did B-round for another company who's just going for B-round? Like, why I would do that as a CFO? And I think that's a hard question. Like, what really motivates people on changing their jobs?
Yes, exactly. And often when you think about like finance people, they're looking for stability and security. So then they might be asking the right questions. Like, for example, like, okay, they would be asking questions from the CEO in the job interview. So how much cash runway do you have left? And then they would think, okay, you have 6 months of cash runway. Do you have enough money to pay my salary in 7 months? And so on. And then they would be kind of evaluating the company from a growth point of view and cash flow point of view. does this company have enough potential to raise a new round and pay my salary and so on? Because then often CFOs are not the people who would be changing jobs every 6 months or 12 months, but they think a little bit longer term because that's just the personality, kind of stability oriented. So then from that point of view as well, it's harder to hire a CFO for a startup, which is kind of inherently a little bit chaotic and unpredictable, right? So then you have to work a little bit harder to hire like financially talented people for a startup, because then they understand maybe a little bit better the financial insecurities of running a startup as well. Because if the goal of the startup is to burn money to grow, and the idea is that they have a certain cash runway, and then after that cash runway, the cash balance is zero, and then before that is zero, they have to raise funding. So then they have a lot of questions in mind for the CEO. How are they planning to tackle that topic? And then other employees might not asking that direct questions, but then CFOs and finance people are and should ask those questions in a job interview. If they're not asking those questions, they're probably not doing their job well, I would say.
Yeah, that's a good question for sure. Hey, we've been talking about kind of measuring and metrics today a bit. And lastly, I want to ask you kind of, if kind of you would be working as a CEO, which you are, and you would have a CFO, like what would be the one metric on like how you would measure the success of that CFO?
One metric. It probably boils down to like having a really solid finance stack and then optimizing the financial reporting and financial forecasting based on the KPIs of the company. And then basically that the CFO could be like doing no manual work, just leaning back and just looking at the numbers, and then things would update automatically from, say, the CRM system, sales analytics from the CRM system, marketing analytics from the marketing platform, and then, for example, SaaS metrics coming from Stripe or ChargeBee and so on. And then, general financial metrics coming from the accounting software, that things would be so well planned and integrated and thought through that you don't actually have to do anything in order to get those financial metrics done. And anybody could go and look at them without actually doing any manual work. So I think that's one key metric, that the CFO has understood the data, understood the key performance indicators that actually dictate your growth or indicate your growth, and is tracking them without having to do anything manually. Because if you get to that situation, then you can change one variable, and the whole thing gives another result. Okay, what if we hired 2 more people? What if we invested 100,000 in more growth? What would be the end result when we especially think about cash flow and revenue? And then answering those what if questions instantaneously. And that requires firstly putting the financial reporting on autopilot. I would say those are the key things, because then a startup is moving so fast and constantly thinking what ifs, constantly thinking how to grow. So then you don't have time to, for every scenario, building that for 2 weeks and spitting out an answer after 2 weeks. Time is too precious. So then automating reporting and understanding KPIs. That would be my probably main metric.
And that's a wrap for today's episode. Thank you so much for listening. Hopefully you got a lot of good ideas about SaaS talent acquisition. If you enjoyed the episode, feel free to share it on your socials so others can hear it too. And if you have a topic in mind that you would like me to cover in this podcast, share it with me as well. I'm Samuli, CEO and co-founder in TalentBee, where we help fast-growing SaaS companies in their talent acquisition. Make sure to follow us, make sure to follow this podcast, and have an awesome week. Bye-bye.